GoldBroker.com own real physical gold and silver bars stored outside of the banking system.
Hello, my name is Dan Popescu, and on behalf of GoldBroker.com, I have the pleasure to speak today with Bill Holter. Bill Holter writes and is partner with Jim St. Clair at the newly formed Holter-St. Clair collaboration. Prior, he wrote for Miles Franklin from 2012-2015. Bill worked as a retail stockbroker for 23 years, including 12 as a branch manager at A.G. Edwards. He's a well-known contributor to the Gold Antitrust Action Committee commentary since 2007. Hello, Bill.
Hi, Dan.
Bill, it's a pleasure. I follow your writings, and I also follow Jim St. Clair. So when I heard, I was really impressed. It's a great collaboration. The two of you, you bring a lot of experience to the field of gold and silver. I've known Jim, followed Jim St. Clair for about 30 years. And I was really surprised but happy when I saw your collaboration.
Thank you.
Bill, I want to start first. There was a story yesterday in Bloomberg, and it fits because it's a lot of questions that came in the last few months about everybody follows the Fed. What did the Fed say? Are they going to raise interest rates? Will they ever raise interest rates? What impact will have on gold? What is your opinion? Because Bloomberg seems to say that the Fed will wants to hit gold in a way to keep gold down.
I don't think the Fed can possibly raise interest rates, especially after today. We have a rate cut by the Chinese. There's no way they can raise interest rates with the rest of the world lowering interest rates. Europe, China. If a strong dollar has already started to hurt earnings, a stronger dollar is just going to destroy the rest of the economy, not to mention the financial assets, the banking system, the derivatives that are outstanding. They can't raise rates a quarter point.
Mm-hmm. And how do you see, gold seems to have been moving nowhere for about a year and a half. Actually, I think about 2 months ago, there were articles that gold is dead, that gold is going to zero. It's just a rock. It seems to doesn't want to go up, but doesn't want to go down. Every time somebody hits on gold to the downside, it reacts right away.
One thing you need to understand is that when you say the hits on gold, those are basically contracts, paper contracts. That's not physical gold being sold. If you look from the physical side of it, the Chinese have been accumulating, call it roughly 200 tons per month they've been importing for over 2 years now. That works out to virtually 100% of global production. Global production is 2,800 tons per year. And if you take out Russia's and if you take out China's production of gold, that leaves you with 2,400 tons. So China has been importing 100% of the physical supply. For the price to go down, the only way the price has been held down is via the sale of paper contracts. And if you look at the COMEX, they've got, 5 or 6 tons total. That's less than $200 million worth of gold in the registered category to deliver. It's, just a couple of days or a day's worth of gold that China's importing. That could be wiped out in a minute. It's no longer the tail wagging the dog. It's a couple hairs on the tail wagging the dog. So that's how they've kept the price down. It's diluting. If you want to call it diluting gold, it would be like what price would IBM stock be if somebody went out and sold 1 billion counterfeit shares of stock? It'd be pennies, and that's the concept of how they're keeping the price of gold down. They're doing it with paper contracts, not physical gold.
You mentioned China. They've been buying quite a lot. They've been keeping secret what they've been buying. They made an announcement recently. What do you think that's their strategy? Do you think they want to support the yuan and attack the dollar, the exorbitant privilege? How do you see their strategy?
I think the core of the strategy was basically to drain gold from the West. There's only so much gold, and they're certainly aware that the 2,400 tons per year that they're importing is all of the gold supply. It's all of what's being produced from the mines. They understand that gold is money. They understand that the West is broke, it's bankrupt, it's a Ponzi scheme, and it's going to collapse. So they have been accumulating gold because they understand that it's money. It's their hedge, if you will, versus the dollar as the foundation or the reserve currency.
I've heard recently there is quite a lot of articles, books on the supremacy of the dollar, that the dollar cannot be touched, that it has a stronghold on the International Monetary Fund, and there is no way the dollar will, at least not for a very long time. Those articles seems to come up recently quite often of the supremacy. I usually mention them that in August 71, I was in Europe on holidays, and nobody wanted my American Express travel checks in US dollars, and it was the first time in history of American Express they created travel checks in Deutschmarks, yen, and I hear recently quite a lot of out of the questions, the dollar is here to stay, and that there is an uptrend in the dollar that's going to go up much higher. How do you see that with respect to gold?
Well, first off, when you look at the dollar index, the DXY, that's versus the euro, versus the pound, versus the Japanese yen. It's not versus a cup of coffee or a hamburger or oil or what have you. So that's a measure versus other currencies. As far as the dollar remaining supreme for a very, very long time or forever, that's ridiculous. China, Russia, the BRICS nations, they are absolutely preparing for a system where the dollar is not used to settle trade. If you look, I think it was yesterday, the IMF announced, they didn't announce it yet, but they've made favorable comments to the yuan becoming part of the SDR basket. So that's the yuan coming into the system. If they come into the pie, they take part of the pie. They supplant a slice or a part of the pie, which will come partially from dollars. In other words, whatever percentage China comes in and takes, the other percentages, it can only equal 100%. So the percentage of the dollar in the SDR will get smaller. China has also gone live this past week, I think it was last week, with a system, an alternative system to the SWIFT clearing system. So that on its own tells you that they're preparing to not do dollars or use dollars for trade. They've done deals with Russia, they've done deals with Iran, they've done deals all over the world without and using yuan and excluding the use of dollars. Truly, the last or ultimate, the buyer of last resort of dollars is the Federal Reserve.
Yeah, and there is a lot of dollars circulating outside of the United States.
Correct.
I think more than 50%.
Probably.
Yeah, yeah. Can I ask you also about silver? There is also recently a lot of talk of premiums going high, no availability of silver. How do you see silver in this context?
Well, from a retail standpoint, I can tell you that for the last month and a half, 2 months, it's been difficult to get silver in the form of coin to satisfy customer demand. The U.S. Mint has been rationing the sale of Eagles, Maples. I think the Canadian Mint suspended sales for something like a month. If they had the silver, if the silver was available, they would have minted the coins. So that shows you that there's a shortage. You're also seeing backwardation where spot prices are above future prices. And that should never, ever happen in a normal market.
I've seen some data recently, and the buying of coins, even though the price is going down, the buying of coins, which I guess we can assume it's mostly individuals, not central banks,
Right.
has been going up in Germany, in Australia, Canada, in United States, where you don't expect you expect a lot of buying from India and China, but a lot of coin buying in United States and Canada. That was a surprise with the price going down.
You have to look at it this way. When the price gets down to a certain level, and let's call it $15, $16, that has brought out, it's created more demand. The public is looking at it and they're saying, well, that's too cheap. And if you look at the premiums, it's always talked about there's a premium to the spot price. I would prefer to look at it as the spot price is a discount to the real price. The real price is what it costs to get an ounce of silver in your hands. That's where the real transaction in the real commodity takes place. So if the spot price is below that, it's trading to a discount to reality.
I would also like to know if concerning the manipulation of the price of gold, there is, I think that the COMEX, you wrote a few articles about it. I think that for quite some time it's been more than, I saw a chart from Nick Laird from Sherlinks, more than 100 to 1. And I saw some discussion on Twitter that it doesn't mean anything because only 5% or less it's being, they ask for physical delivery. How do you see that?
The number is actually something like 240 to 1 now. And that's a function of there's less than, I think there's 182,000. It's just over 5 tons. It's just over 5 tons of gold that is held in the registered category that's available for delivery. It's less than $200 million. It's a ridiculously low number. That could be taken out in one trade. It would take less than 2,000 contracts as a purchase and stepping up for delivery. Now, what could cause a stampede for delivery? It could be anything. It could be a major institution saying that they're upside down in derivatives. It could be a sovereign default. It could be a dogfight in the air between a Russian and American fighter. I mean, who knows? But there's all kinds of potential black swans out there, and to clean up 5 tons of gold is just a teeny tiny bite out of a ham sandwich. It's nothing.
I also usually mention that from my experience, life experience, all those people who say they don't want delivery, when something happens wrong, they call their lawyer to find a very good excuse to pretend they never said it.
Right. Exactly. Well, and gold and silver are if you want to call them funny animals. People want them more when they can't have them. And that's what will happen. You'll see a stampede in, and the amount of physical gold and silver available for delivery is meaningless. It's pitifully small.
Who do you think manipulates and it's involved? I know all the central banks used to be with the London gold pool and also with the Washington Agreement, which was mostly the Europeans. Who do you think has the most interest today to manipulate the price? Is it United States? Could it be, again, kind of a collaboration with, some people even say that even China collaborates?
Well, think of it from this standpoint. Who has the motive? Both the United States and China have motive to keep the gold price down. The United States has the motive because it's a direct competitor with the dollar. So a weak gold price means a strong dollar. And China certainly has a motive to keep the gold price down because it will keep the system continuing, and they can continue to bleed Western vaults of tonnage. So it allows China to amass more and more gold the longer this game goes on, until the Western vaults run out.
Yeah, last question I want to ask you, it's about, you're an American, you live in the United States, maybe you have a different view. With the yuan inclusion, you mentioned it earlier, inclusion in the SDR, it's supposed to be announced sometime in November.
Right.
United States, there is no veto from what I understand, in what concerns the SDR. But could the United States oppose it and surprise us with a kind of a black swan? Because most of the comments are favorable that it will be part of the SDR. But could the United States delay it or do some kind of, say, we support it, but not now, and use some kind of a delaying tactic?
I suppose that's possible. You just have to ask yourself, what would China's reaction be? That would anger China immensely. And I think one of their reactions would be wholesale selling of treasuries.
Oh, okay, yeah. Thank you, Bill. It was a pleasure to speak to you on behalf of GoldBroker.com. Thank you again, and have a nice day. I hope it doesn't rain.
Okay. Thank you, Dan. I enjoyed it.